Hi, this is Darshan Bhatt from Glovista Investments with our market outlook for the week beginning August 16th. This past week, the equity markets continued to edge higher, accompanied by the summer slowdown in trading volume. For the week, the S&P 500 index edged up 71 basis points and the Nasdaq index rose by 18 basis points. Market breadth continued to remain strong, whereas the rotation into value and cyclical sectors gained further momentum. The strength in equity markets this past week was despite the macroeconomic indicators indicating a moderation in activity levels. Most notably, the NFIB Small Business Optimism survey and the University of Michigan Sentiment Index came out considerably weaker than consensus estimates. Similarly, the ZEW survey out of Germany came out weaker than consensus expectations, though the softness in the reading had important contributions from supply-side constraints. Despite weaker than expected macroeconomic releases out of the US and Germany, we believe the outlook for the second half of the year continues to be one of robust growth as the pace of vaccinations across the globe is picking up speed. Mobility indicators continue to remain resilient despite an uptick in Delta strain virus cases. The financial conditions continue to remain exceedingly loose, and the ability of the households to spend continues to remain strong owing to prevailing high savings rate. On the Chinese economy's front, we believe the ongoing wave in virus cases, as well as the accompanying slowdown in demand conditions, is likely to be met by a government-engineered loosening in financial conditions, which have remained tight since the beginning of the year. From a market perspective, the value and cyclical sectors outperformed solidly the tech and growth-oriented sectors this past week in line with our medium-term outlook. We continue to prefer equities as an asset class, and within equities, we continue to prefer value and cyclical-oriented sectors such as US financials, industrials, materials, emerging market equities, and select US large-cap growth stocks. From a macroeconomic calendar perspective, this week is fairly light. However, we shall see the release of August Empire State Manufacturing Index, Philly Fed, July retail sales and industrial production, as well as the leading index out of the US. Out of Japan, we shall see the release of Q2 GDP, August PMI, as well as the June core machinery orders. From China, the macroeconomic calendar this week includes the July industrial production and July retail sales. Thank you for listening. Have a wonderful week.